Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Thursday, the 13th of March. In London, I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, President Trump vows to respond to the EU's metal tariff retaliation as companies across the globe look for cover.
Economic uncertainty and higher taxes leave London facing the UK's largest drop in home prices.
Plus, placing a risky bet on Russia as ceasefire talks accelerate, investors are quietly backing Trump's overtures to Moscow.
Let's start with a roundup of our top stories.
President Donald Trump says the US will respond to retaliatory tariffs from the European Union. He spoke in the Oval Office after the European Commission President Ursula von der Leyen announced levies on industrial and agricultural goods worth up to €26 billion.
The European Union treats us very badly. They have for years. I saw that. I had it out with them in my first term. It did well, but we had to solve other problems, and we did. But European Union's been very tough. And it's our turn, too. We get a turn at that also.
Donald Trump was speaking as Canada also announced 25% tariffs on around $20 billion worth of US-made products in a bid to match American metal levies dollar for dollar, according to the Finance Minister Dominique Leblanc. Meanwhile, France's economic outlook has already deteriorated due to the anticipated impact of a global trade war. The country's central bank cut its 2025 growth forecast to 0.7% from 0.9%, citing US-driven uncertainty.
Well, around the world, companies are preparing for the onset of President Trump's barrage of tariffs. That's as international backlash to the measures ramps up. Bloomberg's Siwa Adebayo has more.
Some of the world's biggest corporates are setting up tariff task forces to mitigate the impact of incoming US trade policy. While some firms are planning to pass on higher costs to consumers, others may not be able to due to intense competition and overcapacity. Big names including Ozempic-maker Novo Nordisk and manufacturer Boeing have already shifted course in anticipation of higher costs and supply chain pressures. The news comes as trade relations remain under pressure as President Trump vowed yesterday to respond to the EU's retaliation against his own measures. In London, Siwa Adebayo, Bloomberg Radio.
US Senate Democratic leader Chuck Schumer says his party will block a Republican spending bill to avert a government shutdown on Saturday. Speaking on the Senate floor, he urged Republicans to accept a Democratic plan to provide 30 days of interim funding instead.
Funding the government should be a bipartisan effort, but Republicans chose a partisan path, drafting their continuing resolution without any input from congressional Democrats.
Schumer's move raises the stakes in an ongoing game of chicken between congressional Republicans and Democrats and likely heightens the risk of a shutdown this weekend. Some Democrats are looking to use the prospect of a shutdown to constrain President Trump and Elon Musk's efforts to dismantle entire federal agencies.
The prospect of a possible shutdown has pushed US equity futures into the red, just as market sentiment on Wall Street appeared to have stabilised after 2 weeks of heightened volatility and a broad sell-off. A cooler than forecast February inflation print for the US pushed stocks higher on Wednesday after 2 days of heavy losses, with tech mega caps leading gains. Meanwhile, strategists at JP Morgan argue that the correction in the US stock market may be complete as credit markets aren't pricing in recession risks.
The UK and France are scrambling to bolster Ukraine's negotiating position as President Trump seeks to force through a settlement in its war with Russia. The two countries are trying to pull together a plan to help guarantee security for Kyiv as Moscow demands a massive scaling back of Ukraine's military as part of any settlement. Speaking after talks with his European counterparts in Paris, the UK's Defence Secretary John Healey says the work is now accelerating to supply troops if a peace deal is agreed.
The UK and France are jointly leading work on plans to drive the push for peace and drive the arrangements for security guarantees for Ukraine. We're doing this work together. We're cooperating closely with partner nations, and we're looking to build a coalition of the willing from Europe and beyond.
John Healy there discussing a plan that would see countries across Europe, the Commonwealth and Asia contribute either funding, troops, aircraft or naval vessels to help protect Ukraine from the prospect of further Russian aggression.
Prime Minister Keir Starmer wants to use AI to save billions in public spending and regulation. A statement from 10 Downing Street says that the UK leader plans to cut the administrative costs of regulation by 25% and sees potentially £45 billion of savings by using artificial intelligence. Starmer will lay out his plan for a digital revolution to reshape the state in a speech later today.
London is forecast to see the largest drop in house prices in Britain over the next 3 months. Estate agents are telling the Royal Institution of Chartered Surveyors that sales have dropped by a third and they expect prices to fall too. Bloomberg's James Wilcock has more.
If you own a house in London, statistics say it lost nearly 3% of its real value last year. It's part of a broader slowdown. Buyer inquiries across the UK are at a low not seen since 2023. But many of the factors that pushed London ahead in the property market are now working against the capital. Experts say on top of tax increases, high borrowing costs, London is also getting hit, both by its unaffordability and the uncertain international politics, which is scaring away buyers. In London, James Woolcock, Bloomberg Radio.
And those are our top stories for you this morning. On the markets, sentiment sours overnight amid the risk of a US government shutdown. Equity markets did end in the green on Wednesday in the US. The S&P 500 snapping 2 days of losses, and it climbed 0.5% yesterday. It was helped by softer than expected CPI data. Futures, though, looking to erase most of those gains. European stock futures are also down. Of course, European stocks did see strong gains on Wednesday with the US Stocks 50 up by close to 1%, and the Xetra DAX in Germany jumping over 1.5%. Asian stocks this morning under renewed pressure. The Hang Seng Index is down by almost 1.5%. The dollar and crude oil are steady, though, with US Treasury yields lower by a basis point across the curve. Those are the markets.
In a moment, we'll bring you more on the latest on Donald Trump's tariffs and our special report about how some investors are making risky bets on Russia's return to the markets. But first, to another story that caught our eye this morning, and how somehow St. Patrick's Day is no longer just one day, but apparently an entire season.
This is close to your heart.
Taoiseach Micheál Martin was in Washington yesterday meeting Donald Trump. That's part of the news around tariffs that we're talking about today. But our colleague Ed Stapley from our Pursuits team has also been reporting about the continued popularity of Guinness, sparked by the online trend called splitting the G, which is where you try and essentially drink as much the exact amount in a Guinness glass that the black line of the stout meets the G in the glass. It's a big thing on TikTok.
Yes,
personally,
on Instagram.
I could not do this.
No?
It is not something to be drunk in a hurry, I would argue, Guinness. But it has been very successful for their sales.
It has.
And actually so much so that Diageo is building another massive brewery in Ireland to try and cope with the demand. We had all, of course, those reports at the end of last year about how there were shortages of Guinness in some London pubs, much to the bemusement of, they were wondering if Irish supplies were going to have to divert to Britain to meet supplies as well. But look, it's been massively successful for them. Really interesting, though, that Ed got the perspective of Tim Martin from Wetherspoons about this. Because, of course, Diageo will tell you this is not a flash-in-the-pan trend. You know, this is something that could really last.
Yes.
Guinness has been a popular drink for such a long time. Tim Martin talks about, look, he's seen everything come and go in the pub trade over the years, even though it's a huge seller for them as well. Yeah. He says that, look, if you go back 10, 20 years, there's other drinks that have risen in popularity and disappeared. Remember Smirnoff Ice and the aughts, all of these things that came and went. So perhaps
I've got no horse in this Guinness race, I don't feel.
Me neither, actually, controversially for some would argue. So we will, it's a great piece if you want to read it on Bloomberg.com and on the terminal as well. Well, let's bring you the latest now on the tariffs story. The US president promising to respond to the EU's countermeasures that were announced yesterday. Bloomberg's Credit Gupta's with us for more on this story. What did we hear from the president, Critty? What could Donald Trump do next in this tit-for-tat escalation?
Well, that's the $1 million question, or the €1 million question, I should say. Maybe billions of euros question, we should say, because he's already done so much of it. He's already put it on things like the auto equipment, on things like the metals as well. Now he's talking about, again, this idea of tit-for-tat tariffs, but he hasn't specified what that actually looks like. Remember, the EU countermeasures came as a response to his initial tariffs on steel and aluminum. When we talk talk about where else those pain points could potentially be, we're talking about looking at the energy sector and the agricultural sector. And that's the response where the EU has really looked for potential items. On the U.S. side, pharmaceutical equipment and medicinal equipment is a big one because that is a key import that the U.S. brings in from the EU. So there's just some of the places where they could be looking.
Yeah, different countries, different parts of the world, different strategies. Look to Canada. They've announced retaliatory tariffs to match the US ones dollar for dollar, according to the finance minister there. Is there any hope of de-escalation here?
It's unclear at the moment because there is also this rhetoric of not just the economic kind of toll that's being taken on both sides of that border, but also the conversation around being a 51st state. And this is something that, of course, is feeding a lot of ill will in Canada as well as some of the energy infrastructure there as well. We have to remember and remind our global audience that the energy relationship between Canada and the United States, not just in the oil space, but in the natural gas space, has been a point of tension even under the Biden administration, where so many of the pipelines that come from Canada into the United States haven't actually been fully approved under the former administration. So this is something, one tool that the Trump administration can use when it comes to those negotiations with Canada. I think a very interesting piece of this, though, is that you can see the Bank of Canada take a page out of the Powell playbook, not from 2024 or 2025, but back from the first Trump administration in 2019, when he first brought up the idea of a trade war with China. The entire world panicked, and you started to see Jay Powell at the Federal Reserve talk about an insurance rate cut. We saw that from the Tiff Macklem over at the Bank of Canada just yesterday, really citing that the reason for this rate cut that they announced in the last 24 hours is the uncertainty spurring out of the United States.
Okay, Kriti Gupta, thank you very much for joining us with the latest on that story. And of course, we'll continue to bring you developments throughout the programme as they happen.
Now, we are still waiting for Vladimir Putin's response to the truce proposal agreed between the United States and Ukrainian officials. This as Bloomberg has learned that investors are quietly betting that Donald Trump's overtures to Moscow will eventually translate into Russia's return to the global financial markets. Our Russia economics and government editor Greg Sullivan joins us now with more on this. Good morning, Greg. What have we learned then about Vladimir Putin and what he's considering in terms of these truce plans?
Well, we could learn a lot more in the next 24 hours as Trump's special envoy, Steve Witkoff, is expected to be in Moscow and meet with Vladimir Putin to discuss the truce that was agreed between Ukraine and the U.S. But in the meantime, what we do know is that Putin is expected to try to drag out any kind of truce talks. He sees that time is on his side. He wants to make certain conditions to agree to any truce. He also wants to dislodge Ukrainian soldiers from the Kursk region where they had that incursion and took territory inside Russia, and he would like to do that before any potential truce. So he sees that time is on his side and will probably try to make some pretty harsh conditions to agree to any truce, including potentially halting weapons supplies to Ukraine to secure any sort of agreement. But until then, we'll wait and see what Witkoff says after his visit with Putin.
This is, we've been reporting, the UK and France trying to come up with a plan to bolster Ukraine's position as these negotiations would progress.
Yeah, Ukraine and France really have taken the lead in trying to rally Europe to bolster not only its own defenses, but also that of Ukraine. They've led talks on the so-called coalition of the willing. They're trying to build a force that could act as peacekeepers in the event of any truce. Of course, Russia does not want NATO members stationed in Ukraine as part of any truce, so that will have to be negotiated if there is a ceasefire. But the other thing that they're trying to do, there is this meeting of defense ministers from 5 major powers in Paris yesterday, and they're trying to canvass European countries and see who's willing to put boots on the ground in Ukraine. And if not, what other ways could they contribute, whether that's stationing land forces in countries next to Ukraine or potentially supplying tanks, ships, airplanes, intelligence to Ukraine. So they're really trying to rally it here. And that's partly because they see Europe's own security architectures intertwined with what is happening in Ukraine.
Our big take story this morning, though, looks at how some investors are now thinking about this, betting actually on the outcome of the talks. What does it mean for interest in Russia's economy and in Russian debt?
Well, there's certainly a heightened interest in a range of Russian securities. It's a very unique situation because you have Russian assets that are deeply discounted given the sanctions and an aversion in the West amid the war. But yet Trump's overtures are suddenly spurring thoughts that potentially lifting of the sanctions could be on the horizon. We spoke to traders who did say that there is renewed interest in, for instance, dollar-denominated bonds in Russia. That's really, that renewed interest is coupled with a limited demand. So it's really helped drive down yields in some cases. And it's not just bonds. The Russian ruble, for instance, has appreciated 13% against the dollar since the start of the year. So, a unique situation, but it's still a massive gamble. There's no ceasefire yet. There's no sustainable resolution to the crisis. And Trump's famously mercurial. His overtures to Russia could end abruptly. He even threatened sanctions last Friday on Russia if they don't cooperate in the truce.
How quickly could Russia return to the markets if sanctions are eased?
Well, potentially quickly, but with a lot of caveats. The U.S. is already weighing how they could ease sanctions as part of any kind of negotiations. We know that the Kremlin has even been surprised by the intensity of Trump's engagement with Putin. But while Trump could lift some sanctions rather quickly through executive action, there are hurdles for others. For instance, some sanctions will be subject to a congressional review period, and that could trigger a congressional vote to try and overturn it and set up a fight with Congress. Of course, these are U.S. sanctions that we're talking about, and Europe has shown no indication that there's any appetite for lifting European sanctions. And Europe was Russia's biggest pre-war market, so those sanctions are important. But even if the U.S. acts unilaterally to lift sanctions, that could weaken enforcement of other sanctions. So it's a pretty complex dynamic, and of course a lot of caveats. And the final caveat I would just add is that Russia might impose its own restrictions. So a lot for investors to weigh.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.